You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, today we got somebody interesting person. You usually think of certified financial planners as, okay, get your mutual funds, get your stocks, get your bonds and all that. Well, this person, he started out life in college as a wrestler. And from that, Eddie, you learned the discipline and the necessity of work ethic and hard work. Looking at the site, which is tactivewealth.com, and just think of active with a T added to the front of it. And you see that this is not your grandfather's financial or even your father's financial planner. Eddie, you have a specialty in cryptocurrencies as well as conventional investments. Why don't you tell us where you're putting your clients now in this time of market turmoil and uncertainty?
Right. So right now, it's one of those things where we're monitoring markets and technicals very closely. And what we've seen this year is that the technicals just aren't behaving like they used to. So we're finding that markets are moving about 5 to 10 times faster than they used to. And we've seen a lot of technical portfolios get head faked quite a few times this year. So as of right now, really, we're being very, very cautious with our long purchases. And for the most part, anytime we're buying anything, we're hedging against it, or we're at least putting some type of stop and profit target in place. So at this point, it's, we're looking for anything that can make money, but we're also making sure that when we buy something, we have a predetermined reason to sell, because what we don't want to have happen is get caught on the wrong side of a market that could fall another 30 to 40%.
Yeah, you don't want to be catching a falling knife, right?
No, it's that whole diversified portfolio. And, I've been through it. I studied in college. I was worked at Raymond James prior to here, where it was all long all the time. And what we know is that one thing that goes up when bear markets is correlation of a diversified portfolio. So when that knife is falling, it doesn't matter what you own. Typically, you're falling with it. And the caveat that we have this year is we're in an increasing interest rate environment. So it's very possible that the bond portfolio could be falling at the same time, which is exactly what has happened.
All right. So what about cryptos? They have not been behaving well either. Bitcoin's trading, it's May 17th. Bitcoin's trading right around that 30,000 range, keeps going up and down. It doesn't look technically strong, does it?
It doesn't. And we apply the same principles to cryptocurrencies that we do to our traditional stock portfolios or our traditional ETF portfolios. And that's identify a buying opportunity, and when we own something, have a predetermined reason to sell. So classic example is our crypto portfolio actually bought Luna earlier this year, got out at a profit target, and then got stopped out. And so we actually made money on Luna this year, whereas Luna is 0.0002 now because of everything that happened last week. So it's kind of the same thing with, we're paying attention to Bitcoin, we're paying attention to Ethereum, we're paying attention to all the coins. But if we don't have a conviction buy where we think that the chart looks really good, we're just going to pass for now. There's no harm in waiting sometimes. And, when the move up happens and the momentum grows, you'd rather get in on the way up than on the way down.
Yeah. Well, like it said, markets go up like an escalator and they fall like an elevator. So, right. So how long do you think this market volatility disruption is going to continue for?
I think volatility stays high as long as inflation, the slope of inflation, I should say, stays relatively flat. So I think everyone's hoping that we have this peak and then things drop off a cliff. But I think the more realistic scenario is we have this peak and then maybe we're even flatlined or we're just gradually falling. And that's due to a number of things. One is the fact that COVID happened and we increased our money supply by 30%. So best case scenario, we would assume that 5 years later, everything would be 30% more expensive. Add that to the fact that we still have unrest all over the world, whether it's due to COVID or whether it's due to conflict. And a lot of unknown typically leads to a lot of volatility. So I would say the volatility probably continues through at least the end of this year. And we're really paying attention to support levels. If we're looking at the S&P 500 as an example, 3,700 to 3,750 seems to be where that next floor is, right? And if we bounce off that floor and hold and can kind of and then we have a good decline in inflation on the other side, that could be a good sign. But then you've got the flip, which says if we break through that, we could end up at 2,000, 2,200 on the S&P 500 again. And my clients will be happy in that scenario because of the way that we hedge their portfolios. But there's a lot of people that I certainly hope they're not retiring with your typical 60-40 portfolio if that happens.
Yeah, well, that theory is dated. It might have worked in the 50s, the 60s, the 70s, earlier 70s, but certainly not now. So the question is, how long you think inflation's going to run for?
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near two producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold two companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
I think it goes on for a while. I think that until we actually end up in a scenario where we start to see the supply chains improve, we continue to see that price action be higher. And so, we're looking 12, 18, 24 months at least. And the reason is kind of twofold. One, the fix to inflation, which is to increase rates, takes time. And a lot of people think, oh, well, that the increasing rates isn't really going to have that big of an effect. But when you really think about it, an increase of 3%, like what the Fed's talking about, is actually a double. And what I mean by that is a lot of financing purchasers of real estate that bought last year were buying at interest rates of around 3%. Now they're buying at interest rates of around 6%. So that means the mortgage payment has doubled. And the same thing for businesses. Businesses started out the year at 3% on their debt. We get to the end of the year and they're at 6%. Well, all of a sudden they've got double the cash flow going over there. So it takes time to trickle in. They say inflation is kind of like blood pressure. It's the silent killer. And so I think it's going to last longer than anyone wants to admit.
All right. So how do you hedge your portfolios? How do you protect your clients in a down market?
Well, first of all, I think the first thing that you do is you realize that I don't want to say it's different this time, but times are different in general. So what worked 10 years ago, 15 years ago, 20 years ago, probably won't work this time around. And so, a lot of people are, we'll just buy treasuries. Well, we saw how that's worked out over the last 6 months. Treasuries have taken a bath with everything else. And so when we're looking at stuff, really we kind of look at things from three angles. Angle one is, anytime we buy something, we're going to have a predetermined stop and we're going to have a profit target. We hit a profit target, we move our stop up. We hit another profit target, we move our stop up. And so we're just following a disciplined trade management in that scenario once we own something. The other thing is we'll use a technical overlay that basically look at the markets as a whole and identify, hey, it's time to play offense or it's time to play defense. Offense is we're buying stocks, we're buying ETFs. Defense right now is we're buying cash. or we're owning cash or money markets. We're really not messing with the short game too much in that type of portfolio. What we're really doing is just saying, okay, when the clouds have cleared, okay, we're going to go all in, and we're going to be patient there. And then the third is actually hedging the portfolio, like you said. So maybe in that scenario, you might be long value and short growth, or you might be in a situation where we're adding some tail risk type protection there. So if we see a significant decline, we're in a good situation because that small piece of the portfolio accelerates to the upside pretty fast. So we're looking at stuff like tail and VIXI is kind of hedges against like that short-term dramatic fall. We're looking at long short is if this thing tends to be a slower trickle like 2000, 2001, 2002. And we're just trying to be patient and just tell our clients, look, it's gonna be volatile for a while. Our job right now is to make you a little bit or to hold our ground. And when the dust is cleared, we'll be in a situation where we'll have a lot more money to buy stuff on sale than everybody else.
Hey, question, Eddy.
Yes.
What is your average client age median?
I would say that the average client is probably 48 to like 52-ish is kind of the primary client that I work with. They plan on retiring in the next 5 to 10 years, or at least being independently wealthy so they can choose not to work. And usually it's a young professional, small business owner, someone who's has the ability to save aggressively, who has a risk tolerance to understand that there's a little bit of volatility that comes along with movement, but also we really try to focus on drawdown risk. So even that retired client who's got $2 million who's just like, hey, I just don't want to lose what I have. The first thing that we talk about is not returns. We talk about how much can your portfolio fall before you fire me? And it's more important to look at it from that standpoint. I got $1 million. I'm willing to let it go down to 900,000 if I can get some type of return. Then, oh yeah, you're conservative. Well, conservative is down 15% this year. So they would have bailed already in that scenario.
Okay. Well, interesting. Well, Eddy, people want to find out more about you, connect with you on the web. What's the best way to do that?
Yeah, I would say you can go to the website or you can go to my Calendly. Actually, it's www.calendly.com/Eddy Gifford. That basically breaks down my process, all the different type of meetings. And then if you just want to schedule a call to just kind of have a conversation about who you are and what you're doing and whether or not you're a good fit for us and we're a good fit for you, we're ready and willing when you are.
All right. Excellent. Well, if you got a question for Eddy, why don't you shoot me an email, kl@kerrylutz.com, and we'll get you an answer. And don't forget, go over to financialsurvivalnetwork.com and get your free newsletter. Eddy, these are trying times. These are the times that try men's souls, as was once said in American history. Nothing like a financial meltdown to really set your priorities straight. And you need to do it before. Really appreciate you coming on, Eddy. We'll talk to you again. Be well.
I appreciate the time. You have a good day. Thank you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.